Hi, I'm Peter Arguelles, IUL man. People have asked me for a simple explanation. Well, it's not a simple product. I like to call it the Swiss Army knife of insurance policies because it does so many things. It really can solve so many problems. But in order to do that, it does require a lot of complexity. And that's why it's good to have a qualified agent like myself or one of my agents who work under me. We are fiduciaries, which means that we are sworn to look out for your best interests. We find the best policy for you. So let me tell you about the IUL. The IUL is like any other insurance policy. It has a death benefit so that if something happens to you, there's an amount of money that goes to your beneficiaries. It's like owning a property where you're paying off the mortgage. As you make payments into the IUL, you're able to borrow against it much as you would a piece of real estate. You get an equity line, have access to money without selling the property. So the same thing with the IUL insurance. You can borrow against the policy, but it still exists and still goes up in value. The IUL goes up in value because the cash portion of it, that which is gaining equity, is tied to an index. And you get to choose which index, part of the flexibility. You get to choose whether it goes with, say, a Credit Suisse, something based in Europe, or the US S&P 500, or you could go with a much more stable fixed amount of 3 or 5%, whatever the rate happens to be that year. Your cash portion grows. You're able to borrow against it. When you pull money out of the policy in that manner, it's not a taxable event. The money is still in the policy. You're just borrowing the equity, and you can use it for anything you want. So that leads us to the next thing you can do with an IUL. If you load it up properly with money, then you're able to borrow the money out of it, use it for other things, perhaps a down payment on a car or on a home or on a business. You could use it to invest in real estate. You could use that money for anything you want. And presumably, hopefully, when you make a profit with whatever you invested in, you put the money back into the IUL so it continues to grow and you continue to prosper and you continue to be able to borrow more money from it. Ultimately, you're going to live to be a ripe old age, and you're going to need more money because you're not working anymore when you're older. So that's where the IUL comes back into play. It has other features that pay you while you're alive, living benefits we call them. For instance, if you get sick with a critical or a chronic illness or a terminal illness, depending on the illness, it could be monthly or it could be the 80% of the whole death benefit paid. You have this IUL, it's doing great. What about your kids? Same thing. You can buy an IUL for your kids, for your wife, for your husband. You can buy IULs for people who you work with in business. If they're a key man or a key woman in your business, you can have them be the beneficiary, or you can be the beneficiary. There's a lot of flexibility. There's a lot you can do with it. The main thing to know is that it's the safest bank account you can put money into. It's not a bank account. It's not an investment, but it is guaranteed by companies that are over 150 to 175 years in business, always paid their debts, extremely reputable, never downgraded. Their AAA credit ratings are solid, probably more solid than the US government at the rate that we keep nearly defaulting on our debts. Get yourself an IUL. It's going to give you peace of mind. It's going to take care of you if you get sick. It's going to take care of you when you get old. It's also going to take care of your heirs when you go. As I like to say, if you did nothing else right in life, if you have a legacy to leave behind, you'll be well remembered. Get an IUL. You'll be glad you did.